What is buy-side liquidity? These are resting buy orders above highs. Where are those orders and who placed those orders above the high? This is where the buy orders were resting. You are at a risk of missing your entry. The reason is, number one, you are outside the candle that swept liquidity. Number two, you are outside the fair value gap. Number three, you are outside the liquidity that is drawing the price towards your zone. You might be trading the same strategy, but you end up missing trades and then you'll start now chasing the price. The price did not care about those traders that have put their limit orders at the very last candle before the impulsive move. The price will do what it wants to do. So it is up to you to know how to master the footprints. And how do you know how to master the footprints? Welcome to Liquidity Mastery. If you are tired of watching endless trading videos with zero results, this is the one that is going to change everything. Today, I will show you exactly how liquidity works, where it hides, and how to use it to your advantage. Stick with me till the end. Once you master this, your trading style will never be the same again. Without wasting much time, let's jump into it. What is liquidity? Liquidity is the hidden engine behind every market move. Learn how to spot it, trap it, and trade it without chasing price. Once you notice and identify where liquidity sits, you do not want to chase the market from behind. You'll wait for the market to come to you because you know very well it is going to come for that liquidity area, and after that, that is the time you're going to enter with the big boys. These are the core concepts that we are going to handle today: buy-side liquidity, sell-side liquidity, inducement, sweep of liquidity, change of character, and fair value gap. What is buy-side liquidity? These are resting buy orders above highs. Where are those orders and who placed those orders above the high? When this move happened like this, it left here, came down, and closed below here. What happens? People have seen now it is time for us to start selling this market. What will happen? They are going to put their limit orders above here. The sell limit orders in this case. What will they put above here? It will be stop loss. So their stop losses are going to be the buy orders resting, because if they are selling the market, their stop loss means the opposite. You're telling the market, look, I want to sell from this point downwards. But what if I'm wrong? You tell the market, okay, buy my order. I'm willing to give you my 1%. So that stop loss is the buy order resting above. And smart money knows exactly that once you entered, you placed your stop loss here. Your stop loss becomes the buy order that is waiting to be taken out. Okay, so that is how I identify liquidity. Therefore, let us look at how this thing happened. This was before, and this is after. What happened? This price came down, closed below here. It came and then swept this high, because this is where the buy orders were resting. It had to pierce through here to activate the stop losses for it to get the fuel to go back. If you are a smart money trader, you wait until these guys have been taken out. Now this is the right time to start looking for sales opportunities. Sell side liquidity. Same applies. When this market moved from here, it closed above here. This swing that was left down here has a lot of liquidity. Why? We have two types of traders. We have the aggressive traders who will want to wait to see this rejection, and then after this bullish engulfing candle happened, what did they do? They jumped in. Where did they place their stop loss? Down here to be safe. They targeted 1 to 2 or 1 to 1, whatever they targeted, but the fact remains their stop loss is down here. Number two, there are those who have seen now after this break of structure, I want to see this market come back, retest this demand zone before it goes up. What are those people going to do? They're going to place their limit orders here, telling the market, once you come down here, activate my order, let me move up with you. Where have they placed their stop losses? Somewhere down here. So you and I know already that there is a lot of liquidity sitting here. As a smart trader, what do? You wait until this side is cleared. Once it is cleared, now it is the time for you to jump in. See what happened. This was before and this is after. Therefore, look at what happened. The stop losses that were resting beneath this zone have been swept by this huge candle. This candle came here, tried to reject, tried to give a false signal that the bulls have come into the market and want to go up. Before you realize, it swept everything downward. Inducement. What is inducement? To induce is to give someone a false signal to do something. Therefore, the market will induce you, will tell you, look, there was this rally, bears, rally. For those who have learned about supply and demand, they will take this as a perfect demand zone. Because of course, once you identify rally, bears, rally, that area does not just become your demand. There are so many other confluences that you need to accompany your level for it to qualify to be a demand. So first of all, this was a zone. It could have held, yes, if only we had enough liquidity. But look what happened and why it has triggered people to enter. So this demand was weak because it enabled this price to go up a little bit, but it never broke the structure. So the demand zone here would have allowed you to trade 1 to 2 very quick scalp and, get out. But smart traders would wait until this liquidity that has been engineered is taken out, and then they will target this liquidity. Okay, then how does this become inducement? For those people who marked this one as rally, bears, rally, they have used this as demand. Okay, they have seen price come down, move up, broke above this internal structure. Inside their mind, they are now saying this zone has held. So the market is in its up run. So we want to move up with the market. What have they done? They have entered their limit orders at this zone. Their stop losses are somewhere below here. So those stop losses will be swept. Why are they going to be swept? Simply because looking beneath this level, there is an imbalance. For you to qualify a zone to be an inducement, you must be able to see a valid zone below it or a valid zone above it if you're looking to sell. In this scenario, we can see clearly that this was an inducement because when this move happened up, it never broke the structure. If only this structure got broken, then this zone would have held. But now the zone did not broke. So anything that is happening, we are still bearish. We have not turned to bullish. Okay, so down here, you know very well that there are a lot of stop losses waiting to be swept. What do? We wait until they're crushed. Whether the market will tap into this breaker block or not, once this liquidity is swept, we are going to start looking for buying opportunities to move this market up. Okay, see what happened. This was before and this is after. Therefore, price came, tapped into this area, moved up, generated buy-side liquidity, came down, crushed all the sell-side liquidity that were lying beneath this level, tapped into this breaker block. And by the way, if you do not know what a breaker block is, when this movement was happening, we had a very strong move down, and the last bullish candle that engineered the move down becomes our supply. If this zone gets violated, it becomes a breaker block because it has changed its role from being supply to demand. That is why we call it breaker block. Right. So this price came down, tapped here, and went up to target this liquidity. This is how I train my people under Gaius Trading Academy on how to enter and exit. After it has tapped here, we know the market next stop will be this liquidity. This way, you are not going to target 10 pips, 5 pips, you enter and exit within 1 second. In the end, you end up paying a lot of commissions, because every entry attracts a commission if you're trading gold, not unless you're doing NAS 100 and these other indices. So it must count when you enter. You enter from a confirmed zone. After you do that, you know that you are going to hold your price. If you get taken out after you followed every process, that is fine. But if you enter just because you think like the market is going to leave you behind, then that is what we call inducement. The market has induced you and you've bought the fear that you are the only one who has been left behind and you want to be part of this move. Unfortunately, the market knows exactly what it has done to you. Therefore, how do you get to know that this is an inducement and this zone is going to be swept? I have already told you, look below. Is there any zone that might hold? When you realize there's a breaker block, you realize there's an imbalance, then this tells you there is unfinished business that this price wants to do down here. And any other move is just a false move to lure people to bring money on the table so that the market can use it to fuel up its movement. Okay, I hope you are getting this clear. Sweep of liquidity. What is sweep of liquidity? Sweep of liquidity is when you see the market is moving up like this, it retraces back. We expect to see a continuation of this trend. What happened? Some people can argue because this candle closed above, it has given us a break of structure. On the contrary, I will tell you it was a fake out. Why do I call it a fake out? Look at what happened. This aggressive candle came very fast, closed above here. There are those people who trade breakouts. What did they see? They saw a very aggressive move up. Placed their buy orders here. Their stop losses at the close of this body below here, or even at this week, knowing they are very safe because the market is going up. What happened immediately? This candle closed above very fast. This other one opened and closed inside the zone. This has invalidated their analysis. Thereafter, what happened? The price tried to lure more people into entering. Those looking for bullish engulfing candle saw this happen and then they called it a retracement. They said, okay, price has retraced to this level. It has given me bullish engulfing candle. First of all, they will assume this was a break of structure because we had a clear candle closure above here. They are going to ignore this bearish move that happened immediately, and they are going to be lured into this move again. They are going to put their positions from here, and their stop losses could be somewhere here, or others are going to put their stop losses somewhere down here. What is the market trying to do? The market is engineering liquidity below this swing. The market knows very well that people who do not want to wait for confirmations have already jumped into the market and their stop losses are lying here. This is exactly what will make the market come down crashing. What do? We wait for confirmations. This change of character is now confirmed from how the price behaved up here, because it closed above and closed inside very fast. This was the very first signal that price is changing momentum. If you had entered aggressively at the closure of this candle and your stop loss was below here, and you see this happen, these two candles, they have given you a complete story that things are changing. If you are buying, run for your safety. Get out of the market as fast as possible. Change of character. What is change of character? Change of character happens when you find a market moving towards one direction, for example, bullish, and then all of a sudden it breaks the structure to give you the bearish move. Like what happened previously. I will take you back. We were on a bullish move. Okay? Up to this level, the market decided it is time to change from bullish to bearish. It swept liquidity, changed the character. Now we are no longer looking to buy. We start now looking for selling opportunities. The same applies here. We were very bearish. The market was printing lower lows, lower highs, lower lows, lower highs. Up to this point that the market was really struggling, it was engineering liquidity. This is what happened. After this area was swept, we saw a very strong move backwards into the zone. It broke this structure. If this is taken out, what do we have? Change of character. Fair value gap. What is a fair value gap? A fair value gap is the space that forms in between three candles. The candles must be 3 in number, regardless their color. You might find that this candle was red, followed by a green one, and then followed by another green one. Provided that there was a space created in between the 3 candles, we call that a fair value gap. This is the first candle, second candle, and a third candle. The space that formed in between these 3 candles, this space is what we call fair value gap. Why is fair value gap important in trading? This swing of the third candle, most of the time, it has liquidity within it, because this market was moving like this, in zigzag move, like this. So this huge swing, it swung below here before going up. What happened? If it swung below here with this huge movement, it means smart money had entered their position somewhere down here, which led to this huge move up. There could be some pending orders that were not filled by the smart money. What will happen? The candles will come back to fetch those orders that were left here before we see a continuation up. Therefore, most of the time, this area will be tapped, this fair value gap mitigated, and then we see a continuation of the trend. Now, let us jump into the charts and see practically how you can spot this liquidity, inducement, change of character, fair value gap, and how you can utilize this information to make informed decisions while you are trading. Let's jump right in. I want us to look at this chart and try to identify all levels of liquidity and real points of interest. This was an uptrend. We see the way the market is moving up, and this is the most recent impulsive move we've had towards to the upside. Therefore, every other swing, like this swing here, generates liquidity. This swing here generates liquidity. Why is it going to generate liquidity? Most people are going to start trading from here, those who do not want to wait for this price to travel all down here, because they know maybe the market is going to move up without them. So they want to get in as early as possible, and they do not want to miss out on the trend. Therefore, we identify these early traders as our liquidity. After this price coming down, this is the zone that turned around the business, and then we started seeing market moving up. Therefore, this becomes our demand area, and we would want to wait for price to travel all the way down here before we see it rallying up. It's trap here because people might call it, after the market is coming to sweep this liquidity, we want to enter this market and move it up. So this is a trap. We want to see this trap being taken out, liquidity swept, market to tap into our zone, and then we want to see it moving up. Let's see what happens. Immediately the price came, pierced through the trap, finished with this liquidity, tapped into the demand zone. It is reversing up. Okay, now what next? First of all, we've seen how this is a trap and how we identify the liquidity. I want us to follow this trend. I want us to wait for the break of structure. We've had a break of structure. We want to identify the source of this break of structure. This was the last swing that swept liquidity before giving us this break of structure. Therefore, we would want to see price come down, mitigate all the imbalance levels here. We want it to come, clear the imbalance, and move up. When you see price come down like this, there is a zone here, there's an imbalance that needs to be filled, but it is trying to play some game around this zone. It is welcoming a lot of people, telling them, look, this area is rejecting. So once it is rejecting, why can't you jump in before the market goes up without you? But for the patient traders, they will wait until this area is cleared. Therefore, what is the market trying to do down here? The market is engineering liquidity. Okay, this is how the market is coded. We proceed to see if it is going to sweep the liquidity or what happens. The market has not mitigated this area. This is very intentional to allow people start chasing the market up. That is why you see this huge candle coming down to sweep every other person who was chasing the market up before it continues with its intended direction. What if you wait for the market to fill your imbalance? Unfortunately, it does not fill your imbalance and it gives you another break of structure. What do you do as a trader? As a disciplined trader, what you do in such a scenario, you wait for confirmation, because you know there is unfinished business below you. Don't put your stop loss above the liquidity zone. Do not enter somewhere here and you put your stop loss here. If anything, your stop loss should come somewhere below here, but anywhere above here, not acceptable. Let's wait and see what happens thereafter. If I was watching this asset and this is what it has given me, what I will do, I will wait to get a second break of structure and see how that second break of structure behaves, because sometimes this place might be filled in the next 1 week or so. Let's wait and see. We've had a second break of structure. Now the question comes, are you still going to hold on to this, or you're going to change and start trading from this area? Whatever the market is doing, it has engineered liquidity like this. I see liquidity. I don't see a single setup. I will continue holding up until price retraces back. Here is when I will start trading. Okay, another break of structure has happened. Are you still going to hold, or you're going to start trading from these levels above here? This level that formed, we call it trap, and the reason why we refer it as trap is because from our analysis we have identified there is unfinished business down here, and whatever swing that the market is generating above this zone is pure liquidity. The market would want to come down, sweep everyone else, tap into this zone before it goes up. We will continue monitoring this price until we see what we want to see. That is the first signal. The price has come and attacked this level. Once this level has been attacked, what does that mean? Probably it is going to be used as a liquidity to enable this zone to push some orders up. Okay? And this is very crucial. Any liquidity that is going to be generated from this zone, if this price comes down like this, comes up here, gives us whatever swing, and then comes down, this swing that was left up here becomes our target liquidity. The trap generates liquidity to be taken out by the orders from down this zone. Okay, price tapped into this level, went up, seems to be rejecting this area. We are doing nothing, we're just watching. This is the power of patience. You rather trade once a month and get your 1 to 10 or 1 to 7 or 1 to 8. You would have done 8% per month. Statistics show that an average profitable trader makes somewhere between 3 to 5% a month. If you make your 5% by waiting for just one trade, that is very crucial. You've already entered the zone of the average profitable trader. Let's wait and see if this trap will hold or it's going to be crushed. See what is happening. You see it has been pierced. Let's see what the market wants to do. Maybe it's gonna hold. We don't know. Remember we said if this trap is touched and then gives us a swing up here, that swing becomes our target liquidity. Okay, I will remove this thing like this and even delete it. Let us follow the trend. It came down, tapped here, went up. So this is the swing that it gave us. This is the draw on liquidity. That is how the market is coded. Once these orders are going to be picked from here, this level will be now attracting all these orders from down here. Because now this level is attracting this price down. There's a magnet here. And after this magnet is mitigated, there's a magnet up here. Okay. We continue. So that is how personally I identify liquidity. And what if this area is taken out? Fine. If it is taken out, that swing that takes it out becomes my next target. It is as simple as that. Provided it was not taken out from the move that originated here. Once this move comes from down here and tackles this liquidity, then my setup would have been violated. I do not have a setup to wait for, because if my liquidity is taken, where am I going to place my take profit? I would be lost. So that is why patience pays off, and discipline actually. Look at what is happening. The price came up here and it is giving us relative equal highs. Relative equal highs are form of liquidity. Let me stop here and tell you something, guys. I want to remove this a little bit and tell you something. There's a little story I want us to discuss about. When this touch came here, went down, and then we had another touch, went down, and then we had another touch. Support and resistance traders have entered their positions up here because they have seen this area as resistance. Okay? If this area is seen as resistance for support and resistance traders, where do you think they are placing their stop losses? Their stop losses are coming somewhere above here. Okay? I want us to do it logically and let this be our take profit. Okay? Let us leave it there. Let's wait and see. Okay, the price now has entered our point of interest. This is what we're waiting for. At this point, what do? We switch to a lower time frame. This is 4 hour. I want us to switch to 15 minutes and look for a setup that will take us to this support and resistance stop losses. Okay, now let's switch to 15 minutes. On the 15 minutes, we want to see sweep of liquidity, change of character, and an imbalance. We're not going to enter yet until we get a confirmation that it is time to pull a trigger. Okay, all this is happening. Someone can say this is an early break of structure towards the upper side. Fine, but have we seen sweep of liquidity? No. Therefore, we are going to wait until this area is taken out and see if this area gets taken out. Are we going to get change of character from there? If we do, well and good, we enter. If we don't, we keep waiting. Remember, we are on the 15 minutes time frame. We want to see what the market wants to do. Down here, you see, it is engineering liquidity. Let me show you now. Someone asked me, how do you even tell? There's a friend of mine who called from Burundi, and he was asking me, how do you tell that this is liquidity? Because you are confusing me. You tell me it is liquidity, and I see the market actually sweeping that area. How do you tell? I tell this is liquidity, one, through the experience, the period I've spent watching the chart print. They say experience is the best teacher. Now, look at this. What was I expecting once I saw price travel down here? I expected to see sweep of liquidity before the price starts to rally up. But what am I seeing instead? Before the sweep of liquidity, price is starting to rally up. If price is doing that before it does the sweep of liquidity, there is nothing else is doing other than engineering more liquidity. That is how I get to know that this is liquidity. So all this is liquidity. That's how I identify. So I want to see price come, sweep everybody else who is entering early, and then now I can enter. So let's wait and see. Look at what the price is doing. Look at what the price is doing. It has swept everyone else. It has swept everyone else. And remember, this is the area I wanted to see attacked before I can enter. So any other person who entered earlier, remember, I saw this as a liquidity because I have watched this 1,000+ hours on the screen. So I know sometimes the price would want to do this to tell people you're getting late, jump in, let's go. There's a first break of structure, there's a second break of structure. This market is leaving you. There's an imbalance here. Why can't you enter from here so that we take your orders up? Immediately you enter, price comes with this huge candle, then crashes you. And you wonder, how did this market know that I have entered before it came against me? No, you were induced and you accepted the inducement. You don't do that. Okay, now the price has swept liquidity. However, I will still wait because I do not know if this is the last liquidity to be generated or it is going to generate another liquidity down here. So we will continue with the game of waiting for confirmation. Waiting for confirmation. So which confirmation am I waiting for? After this sweep of liquidity, I want to see this structure taken out. If this structure gets taken out, that is the point I will start now putting my limit orders. Remember, we are inside our point of interest. There's a new swing that has formed just inside here. I want to see a change of character. I will continue monitoring the price up until it shows me that it is time. Okay, it has again generated liquidity and swept it. sweep of liquidity. What do we have? We have another swing here. So that is how we hunt the market. Slowly, you follow it from behind because you know what you're looking for. Look at this. It is like momentum is building. What has happened here? This is a sweep of this zone. I want to see a candle closure above here to give me a complete confirmation that we have changed the direction. Once this has happened, now I have a complete change of character. After you get a complete change of character, you've confirmed the liquidity has been swept. The zone that generated this move has been violated. What is left is for you to enter. Remember, we have our take profit waiting for us up there. Now, where do we enter? Entry must be within the candle that swept liquidity. This is where the sweep happened. Simple as that. This is how I personally do. Some people do it the different way. Some people do it from this inverse fair value gap, balanced, I don't know, price zone and all that. For me, I target this candle. You see the open of this candle and the closure of this candle. I will take my level all the way down here. This will enable my orders to be triggered. Do you know why? This zone here, if you remember the fair value gap, I told you fair value gap carries liquidity within it. We have a fair value gap within this zone, and when I see a fair value gap, personally from my point of view, I see liquidity. Once I see liquidity, I see a setup. Once I see a setup, I enter. Therefore, I want to enter my long position at this level here. My stop loss will come to this wick down here. Remember, I know the price need only to come to mitigate this liquidity and go up. It has no business coming down here because at first it has swept this liquidity and it has shown me the direction has already changed. So I do not have any fear of contradiction that this price is coming to attack anything again down here. And if it does, fine, it means my analysis was wrong. I will accept my loss and move on. I want us to target the liquidity we saw and then see how much are we going to get out of this market. You remember our level of liquidity? It was up here. This is where support and resistance traders have placed their stop losses up here. That will give us 1 to 17. Okay, 1 to 17 may look very unrealistic because the market will take time before it comes all the way up here. I normally say if you can get 1 to 10, just get out of the market and let the rest run. Our target is up here. Now what we do, we just want to see if we are going to get it or we will be taken out. This is 1 to 17. There's something I want you guys to see clearly. Assuming we use this last candle as our entry, this last candle here, you are at a risk of missing your entry. The reason is, number one, you are outside the candle that swept liquidity. Number two, you are outside the fair value gap. Number three, you are outside the liquidity that is drawing the price towards your zone. I want us to put two limit orders and see which one will get triggered using the last candle and using the right candle, because this is the right demand. This other one, this is just, trial and error. This is a trader within Gaius Trading Academy, and this is another trader who is following some other mentors out there. Let's see the difference. Okay, the price came. Students for Gaius Trading Academy have been triggered. We want to see if these other students are going to be triggered or not. Price has left. Let us wait. Just maybe their orders will be triggered. Just maybe. They missed an opportunity. Simple. That is what I wanted you guys to learn. You might be trading the same strategy, but you end up missing trades, and then you'll start now chasing the price. The price did not care about those traders that have put their limit orders at the very last candle before the impulsive move. The price will do what it wants to do. So it is up to you to know how to master the footprints. And how do you know how to master the footprints? It is through backtesting and lots of hours on the screen trying to watch the candles print. Every candle is going to give you a story, and as you develop the capacity, you are going to move from the losing trader to a profitable trader. This does not mean that you are not going to take losses. You are going to take one loss and maybe you make 9 wins. Losses are inevitable. Sometimes they occur, but you are not going to make some stupid mistakes like this one, putting your entry down here at the last candle before the impulsive move, yet you do not have any logical reason why you want the price to come down there, right? The price is interested in liquidity. It does not care about your limit orders you've placed down here, okay? At this point, we've moved up. We've broken the first structure. So what do we do? After this break of structure, let's be honest. We want to take our risk off the table. What do we do? Move your stop loss to break even, okay? You've got nothing on the table. If the price decides to come down to your entry, what happens? You lose nothing, you win nothing. Therefore, let us now work with the in-house money. 1 to 17, okay? Let's see. Take profit just got hit. Our take profit just got hit. We looked at this level and we said, above this level, what can we find? We said we were going to find stop losses of support and resistance traders, and that is why we wanted to exit at that point. And look at what the market has done. The market just came, tapped that level, and closed inside. If I can summarize how I view the market, this is a bullish trend. The market consolidated down here, moved up, consolidated again, giving us this minor demand, moved up again, engineered liquidity, went up, came down, triggered early buyers that we are going to hold. They bought from this zone, it went up, gave us this swing. This swing is pure liquidity. Came down, crashing the stop losses of these early traders. What happened? It tapped into this demand zone. After tapping here, it went up a little bit, came down to collect the orders on the lower time frame demand, delivered them to this liquidity. After that, it has given the double top for the support and resistance traders to trade from this ankle. So if they are going to put their stop losses here, we are coming for them later on. So it has crashed down, collected all this liquidity. If anyone bought from this area and they wanted to take their take profit at the tip of this level here, they were caught red-handed here and they were swept. So that is why I advise people always take profit whenever you see liquidity within the range, okay? What happened? It crashed everyone here, tapped into this major demand, rallied up, crushed all the liquidity lying here. The stop losses of these support and resistance traders tapped into this supply zone. Because we are on a bullish trend, we don't expect this supply zone to take prices very low. It brought the price down here, generated some liquidity, went up, took out the liquidity, and then proceeded with the intended direction. That is the power of mastering liquidity. Once you understand where the money is in the market, you trade with confidence and precision. If you found this valuable, make sure you apply it in your next trade and watch how your results will change. For more in-depth strategies like this, join me inside Gaius Trading Academy, where we go deep into this concept step by step. Thanks for watching, and I will see you in the next lesson. Don't forget to like, subscribe, and comment below on what you'd want to see me cover next. Bye bye for now.